I was always hesitant to start a podcast because, well, I've got a busy life, and the last thing I want to do was add one more chore on my to-do list. I thought about paying others to do it for me, but just didn't feel like it was worth it. My mind changed when I heard about Spotify for podcasters and how simple and easy it was to record, edit, schedule, and distribute my podcast everywhere I wanted it to be. Seriously, the process takes you less than 5 minutes, and that's including putting together polls and questions to engage with your listeners, plus adding ads and subscriptions. That way you can make a little money on the side or turn it into your main source of income. And best of all, they do all this for free. So instead of putting money in other people's pockets, choose the platform that does the work for you and helps put money in yours. Get started at www.spotify.com/podcasters or download the Spotify for Podcasters app today. Hey gang, welcome back to the Trading Coach Podcast. In today's episode, we're going to talk about primary and supplemental trading strategies. What should you look for in that supplemental trading strategy, and the timeline of how long it may or may not take as a trader to develop either or. Now, before we get started, I want you to do something, guys. If you're on Instagram, go follow me at Akil Stokes RTM. I just started a new broadcast channel for the Trading Coach Podcast, and this is like a little group chat that I can use to share a few behind the scenes looks, give you the heads up about things that are happening, and just kind of talk to you about trading related stuff in kind of a more intimate type of a way, something that's not out there to the entire public, but for you guys who want to peek behind the curtain. So Akil Stokes, or at Akil Stokes RTM on Instagram, just checking the profile, you'll see Trading Coach Podcast, the broadcast channel. Click join and get a sneak peek at what's happening behind the scenes of the Trading Coach Podcast. If you're someone that's more of a counter trend trader that, again, takes targets at the first test of structure, this is going to be the downside of trading that way. You are not going to be in a lot of trend continuation trades at all, because it's going to be very hard in most cases to get a one-to-one risk reward at previous structure. And I was talking to Jason yesterday, and we're talking about kind of main strategies and supplemental strategies, and how sometimes a supplemental strategy helps smooth out the equity curve of your main strategy. And for me, that's my story behind the trend continuation trading, right? So counter trend trader, pattern trader, right? And historically, it was actually the month of September always used to destroy me in trading. Historically, the month of September was a very directional month. As you can guess, directional movement, trendy movement. My counter trend trades would be destroyed. My advanced pattern formations would be destroyed. I would consistently lose every September. So in order to smooth out that part of my equity curve, I decided to implement a trend continuation type of trading, right? So it's not true trend continuation where you're looking for the extension, but it's a way to get some exposure to some trend continuation moves, not to create a super profitable strategy in its own right, but as a way to kind of limit the damage of my counter trends, right? So if you can imagine that my counter trend strategy, right, does great all year, blah, 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 blah. And then we hit September and it's a drawdown, it's a dip. And then you spend the rest of the year, October, November, December, trying to fight back to basically where you were before September or get a little bit higher. If there is a way to simply just limit the drawdown, if there is a way where within that month of losing, if I can just sprinkle in a few winners and kind of just keep my head above water, that does wonders for the overall equity curve. And it's one of those things where if you look at the trend continuation strategy in its own right, it doesn't wow you, right? It's something that if you looked at it and say, hey, I was only trading this as my main strategy, you look at the percentage return, it's like, is it worth trading? Maybe not, right? And this is before I added like the ability to take like home run trades and stuff like that. This was just the kind of the first phase of it. But it probably doesn't wow you. You probably wouldn't trade it live in its own right. But when you add it to another strategy, you can see that it has a different type of power. The power isn't in really extending your extensions, right? So extending your new equity highs. The power is in limiting your drawdown. It's kind of like a risk management strategy in a sense, where it allows you to lose less. And when you lose less, it allows those future winners to, instead of just go back to break even, the previous high watermark, you can now surpass that break even level and push even higher. And when you think about strategies and kind of the evolution that you go through as a trader, what typically happens is you start with a single strategy, right? Your main thing, right? And then as you evolve and as you grow and you get more curious, you add these supplemental strategies, and these supplemental strategies are there to support the main one. Sometimes you'll stumble across something that stands out in its own right, but it's just like the day trading conversation that we had yesterday, where it's like, when we look at that business we're talking about, right? Day trading wasn't something that necessarily I was going to form my whole business off of, right? It wasn't the main product in the store. It was a side product. It was, I own a burger company, right? And I've added a chicken sandwich, right? Now people still come to the store because it is a burger company, right? They come to get hamburgers, but there's an option for chicken. If someone doesn't eat meat, say there's a family that comes, because we're a family-friendly restaurant, and let's say the two kids don't eat meat or whatever, don't eat meat. Well, now they don't have to sit there and starve, right? The parents can order their burgers. The kids can order their chicken. It limits that loss of those two potential customers by giving them an alternative option. Is the chicken sandwich the best performing sandwich in the store? No. Like, would my store survive? Or it would survive on just selling chicken sandwiches, but would it be booming? Would business be booming with just chicken sandwiches? No, probably not. But it allows me to capture those customers that would, in other cases, not be customers, which in a way makes up for that loss. Because if you bring 4 people in the door, you expect 4 sales, right? You bring 4 people through the door in a restaurant, you expect 4 sales, right? If you bring 4 people to the door and you get 2 sales, that's pretty much the same as a loss of money. So now you're making up for that. Brendan says, on average, does it take another 6 months to add a supplemental strategy? A couple months to vet out the strategy, 2 more months to back test the strategy, and 1 month paper trading? All mileage varies. I'm not spending 12 hours a day like you were. Yeah, that's going to be there. There's no answer for that. It all depends on the trader. It all depends on the amount of time they have to work on the craft, how quickly they get through the process, and how quickly they want to start trading. Yeah, because like somewhat, like if you nail it right away, you can create a strategy that works maybe in a month. Or you could be like me, and I've been looking for a strategy that works on the daily for the last 5-6 years, right? So it all varies depending on what you're looking at, what you're looking for, and how quick it takes to get it, right? If you know what you're looking for, right? If you know that, if Lynn's in here like, hey, I'm a trend continuation trader, but I want to trade advanced pattern formations, it's going to be very easy for Lynn to say like, hey, okay, we got this course section on advanced pattern formations. I'm going to start with the cipher. Let me learn ciphers. Lynn could start trading that probably in a month, right? You learn how to trade it. The rules are pretty simple. You develop your eyes. Maybe you spend a month, 2 weeks doing that. You don't really need to make a lot of tweaks because pattern trading kind of is what it is, right? It's more counter trend. So you take it, you get in, get out, and you get to the next one, right? So Lynn can start back testing probably after those 2 weeks. Back testing, maybe that takes you a month, 2 months, depending on how much time you have. Paper trade for a couple weeks, and then boom, you could be good to go in 2-3 months. If you're starting from scratch and you're adding, let's say, hey, I want to add a trend continuation strategy, but I've never been a trend continuation trader, or maybe I want to add a CTS type strategy where the CTS has lots of moving parts, where you got to decide what do you value, what points do you want to assign to them. Do I want to have the non-negotiables where I have to have these things, or do I just need this value? How do I decide what my CTS value needs to be? Do I need a minimum of 4? Do I need a maximum of 8? What, right? There are more moving parts in that. That's going to be honestly, more analysis is taken to do the CTS. Patterns are pretty easy, right? Look for a pattern, X to A to B, B to C, C to D, boom, I'm good. CTS, it's a little bit more discretionary, right? I have to analyze levels of structure now. Is this a minor level of structure versus a major level of structure, right? Where do my targets go? Am I going to use this? Am I going to use that? So something like that could take maybe 6 months, where something else can take 2 months. And then again, like I said, the ability of the trader. Everyone learns differently. Some people learn fast, some people learn slow, and the amount of hours you can invest. Where, hey, some people can invest 12 hours a day. Some people can only invest 12 hours a week. So it's no way I can answer how long it would take. But this is more reason why I say, for the people that want to start, there are some traders out there that want to start trading like 4 or 5 strategies at once. So they're literally like learning 4 or 5 strategies at once. And they're like, I'm going to trade all 4 or 5 at the same time. And I think that's a very bad idea. Not only is it going to take you a massive amount of time to go through the process, but you're probably not going to be good at it because you're splitting your attention 4 to 5 ways. And you guys know how I feel about attention and bandwidth and the energy bar, right? If you split it 4 ways, you're investing 25% of your energy in each of those things instead of 100% in one of them. You're going to be more prone to mistakes and errors and overlooking stuff like that. So what I always advise traders is this: find your one strategy first, right? And if you can, make it something simple that makes you money. So if it's something that's simple, like, hey, I learned this, it's simple, I can do it quickly, it can make me money, I've mastered it, blah, 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 blah. And then while you're using that strategy to extract money from the market, that's when you spend your time doing the other strategy, right? So going back to the restaurant reference, because I'm very hungry, it's one of those things where it's like, hey, I want my restaurant to serve hamburgers, hot dogs, chicken, fish, milkshake, salads, this. But I'm known as a hamburger spot, right? So the first thing I want to do is I want to master my hamburger. Let me open up and I'm going to sell these hamburgers. I'll sell these hamburgers. I'll get people in the door. I'll have something that I can sell them. And then as we're selling these hamburgers and paying off rent and stuff like that, we'll start working on the next sandwich. We'll start working on developing this chicken sandwich, because while we're doing it, we're not losing money, right? Because, and if you think of like time being money in trading, time is kind of money. So if you're not trading, you're wasting, you're not literally losing money in the market, but you're losing time. And time is something that's always ticking down, right? I believe we should be very purposeful with our time, and I believe in urgency, because time runs out and we never get it back. And each breathing second we get closer to death. Not to get too morbid, but the idea is, how can I maximize my time? So if I'm making something, I am kind of paying for that time, or getting paid for that time while I'm working on something else. And it's that kind of like that bunk bed type of reference that I put out in the podcast the other day. So yeah, it could be 6 months, it could be a year, it could be 3 months. It all depends on what type of task you're looking to take on. If you need more help on developing strategies or just learning how to trade in general, make sure you check out the educational resources available on our website, www.tier1trading.com, where myself, Jason Greystone, and a handful of other coaches, many of which were former students of ours and now like to give back to the community that helped them achieve success, will help you achieve success as well on your trading journey. So www.tier1trading.com. Recommend starting with the 14-day risk-free trial membership. That way you can get on the platform, check things out, and see if we're the right fit for you before making any type of commitment. Once again, that's www.tier1trading.com.